Let's get straight to the point. Meta investors are disappointed. They've had flat growth, declining sales, and decreased profit compared to last year. According to their recent financial report, their net profit for the quarter decreased by 52%. It seems that they are facing real difficulty. If nothing changes, we will analyze in this video the flailing of the once unbeatable giant. Hi again, folks. Welcome to another episode of Maslow's. Meta has been creating buzz these days for a variety of reasons. Workers allegedly hacking user accounts and accepting bribes, a declining stock price, mass layoffs, an increasingly inefficient business plan, and of course, a doomed metaverse project. As of now, Meta is worth about $1 trillion. It's only worth 1/3 of that. The company's stock price has fallen to levels last seen in January 2016. If you invested in Meta at that time and didn't take gains, you lost money this year. To understand this better, let's travel back to 2005, when Facebook's past president, Sean Parker, would help Mark Zuckerberg navigate his way around Silicon Valley. He would also help Zuckerberg gain complete control of the company under his guidance. Mark Zuckerberg, who would set up the company so that he was essentially the king. Even the board of directors could not control him. He couldn't be touched. He had authority over everyone. Fast forward to today, users are now shifting from computers to smartphones. Yeah, sure. Facebook adapted the new technology and innovated. Hence, Mark Zuckerberg thought that the company should have been a stronger participant in the hardware industry. In the year 2013, Facebook attempted to launch their own smartphone, but unfortunately, the public snubbed it. And that led Zuckerberg to try something new. And he found it a year later when he viewed an Oculus demo. He acquired Oculus for $2 billion and went all in. He was convinced that VR would be the future of computing. From changing the company's name to spending $10 billion per year on research just to make his vision a reality. And because none in the company would actually stop him from making bad decisions, one of the major issues unfolded. Though, from our perspective, technology as a whole seems to be heading in the direction of a widely utilized metaverse environment for the public. Don't forget to like, share, comment, and subscribe. Based on consumers' personal data, advertisers successfully found out that the first set of workers got wealthy. This was beneficial to wallets, but awful to consumers. Users were furious when they discovered they were being exploited. But it didn't matter since they were earning money like crazy. Without realizing it, Meta had been exposed to any outside organization that restricted its data collection, which is precisely what occurred in 2021. However, as per Meta's chief financial officer, David Wenger, Facebook advertisers are now beginning to switch to Google more often. Because of this, it seems like Zuckerberg can't keep up. Instead, Meta concentrates on copying other features from other platforms, Reels from TikTok, and putting them into Instagram. It's truly a challenge for them to compete with one of the finest social media algorithms. Speaking of Reels, it is not as profitable as Instagram's other functions. In terms of user experience, Instagram is recently clogged with ads and drifting far from its original concept. As of the moment, Facebook has laid off 11,000 employees, or 13% of its workforce. Even though increased interest rates are destroying high-risk assets like big tech, a 70% drop in a year is nothing to complain about.
The bloodbath in tech continues with Facebook, or Meta as it's now called, firing more than 11,000 employees. That's about 13% of its workforce. And some of those Axe workers are going on social media to share their heartbreak. Ann Mercogliano reports.
Facebook founder Mark Zuckerberg is laying off 11,000 workers. I'm outside Facebook's New York City headquarters. Fired workers are expressing heartbreak over social media. They got the bad news early via an email at 6 a.m. and they were given 1 day more access to their work emails to say farewell to their colleagues.
Oh my God, who wrote this?
This was literally like my dream job. And I was so proud of myself when I got it, and I'm still very proud of myself.
Hey TikTok, I don't have a job anymore.
I don't even know what to do with myself. I have been working since I was 15 years old. I've never once been unemployed.
This pregnant woman's last day is also her due date. She couldn't stop sobbing. Much of the problem is Zuckerberg's $100 billion investment in the metaverse.
You're watching Maslow's Finance. According to Zuckerberg, the problem was excessive investment. In a call with investors on November 10, he claimed that, "Unfortunately, this did not play out the way I expected. Not only has online commerce returned to prior trends, but the macroeconomic downturn, increased competition, and added signal loss have caused our revenue to be much lower than I'd expected. I got this wrong, and I take responsibility for that. Beyond financial woes, Meta is facing investigations from the FTC and a whole host of antitrusters looming and threatening either to break up the company or make it harder for them to simply acquire companies like they could in the past. I also don't have to reiterate all the scandals like Cambridge Analytica leaked documents on mental health and social division. The demographic shift also wasn't helping." According to Kevin Rose of the New York Times, TikTok has eaten Meta's lunch on both Facebook and Instagram. Meta is having an identity crisis with a tunnel-visioned ruler at the helm. So what's next for the social media giant? It seems like Zuck has some soul-searching to do. On the bright side, Meta does still have about 4 billion consumers. It will be most interesting to see what happens next. What are your thoughts? Share them in the comments below. If you found the video useful, please like and subscribe. Also, don't forget to click the bell icon to keep you posted on our new uploads. Thank you for watching, and we'll see you again in the next video.